For our financial focus, and analyst Steve Budin joins me now. Nice to see you again, sir. It's been a while, right?
Happy New Year, hasn't it?
All right. We're going to begin now with the mixed jobs reports. Some good news, bad news, but really mostly good news.
Yeah, we'll start the year with some good news on the employment front. Jobs report came out at the end of last week for the month of December. The year ended on a great front. Just about all the reports were as expected, even a little bit better than expected. Unemployment rate stays close to 4%. The thing that really knocked it out of the park for me is the long-term unemployed number dropped over the year by over 350,000.
Now, you're saying on the sort of the downside, I guess, is still, and we talked about this before, construction worker shortage. They're still looking for these people for these jobs.
Yeah, it's a good news, bad news scenario. If you're a construction worker, you're basically writing your own ticket. What it also shows is the number of people that are unemployed don't have the skills to fill the jobs that are necessary. 6.6 million, give or take, unemployed, but there's over 4.5 million job listings. So there's a disconnect there between those looking for work and the employers looking for the skills needed.
All right, moving on now to the tax bill. A lot of confusion about this, well, what does this mean for me, and when will it take effect? So you have, and I was a little bit confused by this.
Yeah, I got a few emails over the weekend, so I figured it would be good to discuss. The tax bill that went into effect on January 1st of 2018 is for the 2018 tax year. So when you're doing your taxes this month or next month, it's for 2017.
Right.
So you're really not going to see the benefit of the tax bill. It took the IRS a few weeks to get the payroll withholding tables going. So starting in February, most folks, their payroll withholding should drop a little bit. So you should get a little bit more in your take home.
And so then that's when you know they'll start to take effect, is when you see the difference in your paycheck.
Right.
All right, finally, we're talking about holiday sales. Certainly were really, really good, but now here we are, here comes the debt, and we're talking about a whole lot of credit card debt.
Yeah, and I wish I could say I'm surprised to report on this, but credit card debt is as high as it's been since the financial crisis, 2007, 2008, which is never a good point of comparison, but we're looking at close to $1 trillion of credit card debt. So while retail sales were good, unfortunately, a lot of folks overextended themselves, and now the bills are going to become due coming in January. Don't ignore them. Just make sure you're strategically placed to pay those bills down.
And
it's very important.
And now might be a good opportunity to take advantage to transfer over to new credit card deals. Sometimes you get that 12-month sort of zero interest.
Right. So if you're responsible and you have decent credit, a lot of the credit card companies starting in January will offer these 0% transfer balance promotions where you don't have to pay interest for 12 to 18 months. Not a bad thing to take advantage of, but you got to stop charging on the old card to make it worthwhile.
But at least it'll give you a chance to get ahead a little bit. As always, Steve Budin, thank you for your time. Good to see you.
You too. Happy New Year.
All right. Happy New Year. Take care.